company did well, we did well. When the company did not do well, sir, we did not do well.
The men who destroyed their own companies and plunged the world into crisis walked away from the wreckage with their fortunes intact. The top 5 executives at Lehman Brothers made over $1 billion between 2000 and 2007. And when the firm went bankrupt, they got to keep all the money.
The system worked.
It doesn't make any sense for us to make a loan that's going to fail, because we lose. They lose, the borrower loses, the community loses, and we lose.
Countrywide CEO Angelo Mozillo made $470 million between 2003 and 2008. $140 million came from dumping his Countrywide stock in the 12 months before the company collapsed. In March of 2008, AIG's financial products division lost $11 billion. Instead of being fired, Joseph Cassano, the head of AIG FP, was kept on as a consultant for $1 million a month.
And you want to make sure that the key players and the key employees within AIG FP, we retain that intellectual knowledge.
JP Morgan took over first Bear Stearns and then WAMU. Bank of America took over Countrywide and Merrill Lynch. Wells Fargo took over Wachovia.
After the crisis, the financial industry worked harder than ever to fight reform. The financial sector employs 3,000 lobbyists, more than 5 for each member of Congress. And since the crisis, they're spending even more money. The financial industry also exerts its influence in a more subtle way, one that most Americans don't know about. It has corrupted the study of economics itself. Since the 1980s, academic economists have been major advocates of deregulation and played powerful roles in shaping U.S. government policy. Very few of these economic experts warned about the crisis. And even after the crisis, many of them opposed reform. Larry Summers, who as Treasury Secretary played a critical role in the deregulation of derivatives, became president of Harvard in 2001. While at Harvard, he made millions consulting to hedge funds and millions more in speaking fees. Frederick Mishkin, who returned to Columbia Business School after leaving the Federal Reserve, reported on his Federal Disclosure Report that his net worth was between $6 million and $17 million.
Do you consult for any financial services firms?
The answer is I do. But I do not want to go into details about that.
You've written a very large number of articles about a very wide array of subjects. You never saw fit to investigate the risks of unregulated credit default swaps?
I never did.
Same question with regard to executive compensation, the regulation of corporate governance, the effect of political contributions.
I don't know that I would have anything to add to those discussions.
I've taught at Northwestern, Chicago, Harvard, and Columbia.
Glenn Hubbard is the dean of Columbia Business School and was the chairman of the Council of Economic Advisors under George W. Bush.
Do you think the financial services industry has too much political power in the United States?
I think so.
Looking at your resume now, it looks to me as if the majority of your outside activities are consulting and directorship arrangements with the financial services industry. Would you not agree with that characterization?
No, to my knowledge, I don't think my consulting clients are even on my CV, so no.
Who are your consulting clients?
I don't believe I have to discuss that with you.
Okay.
In fact, you have a few more minutes and the interview's over.
Do they include other financial services firms?
Possibly.
You don't remember?
This isn't a deposition, sir. I was polite enough to give you time. Foolishly, I now see. You have 3 more minutes. Give it your best shot.
So, what do you think this says about the economics discipline?
Well, I mean, it has no relevance to anything, really. And indeed, I think it's a part of the, it's an important part of the problem.
The rising power of the U.S. financial sector was part of a wider change in America. Since the 1980s, the United States has become a more unequal society, and its economic dominance has declined. Companies like General Motors, Chrysler, and U.S. Steel, formerly the core of the U.S. economy, were poorly managed and falling behind their foreign competitors. And as countries like China opened their economies, American companies sent jobs overseas to save money.
For many, many years, the 660 million people in the developed world were effectively sheltered from all of this additional labor that existed on the planet. Suddenly, the bamboo curtain and the iron curtain are lifted, and you have 2.5 billion additional people.
American factory workers were laid off by the tens of thousands.
Our manufacturing base was destroyed literally over the course of a few years.
As manufacturing declined, other industries rose. But those jobs require an education. And for average Americans, college is increasingly out of reach. While top private universities like Harvard have billions of dollars in their endowments, funding for public universities is shrinking, and tuition is rising. Tuition for California's public universities rose from $650 in the 1970s to over $10,000 in 2010. Increasingly, the most important determinant of whether Americans go to college is whether they can find the money to pay for it. Meanwhile, American tax policy shifted to favor the wealthy.
When I first came to office, I thought taxes were too high, and they were.
The most dramatic change was a series of tax cuts designed by Glenn Hubbard, who at the time was serving as President Bush's chief economic advisor. The Bush administration sharply reduced taxes on investment gains, stock dividends, and eliminated the estate tax.
We had a comprehensive plan that, when acted, has left nearly $1.1 trillion in the hands of American workers, families, investors, and small business owners.
Most of the benefits of these tax cuts went to the wealthiest 1% of Americans.
And by the way, it was really the cornerstone in many ways of our economic recovery policy.
Inequality of wealth in the United States is now higher than in any other developed country. American families responded to these changes in two ways: by working longer hours and by going into debt. American families borrowed to finance their homes, their cars, their health care, and their children's educations.
People in the bottom 90% lost ground between 1980 and 2007. It all went to the top 1%.
For the first time in history, average Americans have less education and are less prosperous than their parents. For decades, the American financial system was stable and safe. But then something changed. The financial industry turned its back on society, corrupted our political system, and plunged the world economy into crisis. At enormous cost, we've avoided disaster and are recovering. But the men and institutions that caused the crisis are still in power, and that needs to change. They will tell us that we need them, and that what they do is too complicated for us to understand. They will tell us it won't happen again. They will spend billions fighting reform. It won't be easy. But some things are worth fighting for.